All right, folks. So let's just take a look at the market. So S&P rally, pull back. The first bar, the monthly highs went from 810. Second bar to 848, and now they dipped to 784. So there are less monthly highs being made. The change is by about 64. So because the last day was 848 stocks making monthly highs. Today it's 784. So that's a reduction of 64 stocks making monthly highs. So if they're not making highs around here, it's going to be hard for the market to move up. Okay. As far as a wave is concerned, you had about 107 stocks going down and pulling back on about 59. So the bearishness still holds. All right, so we're going to see what happens, but as of right now, see, it's a little difficult to tell because monthly highs and lows reduced. So the stocks, I think we're at a cusp, like a tipping point, and might see what happens because we're right at that resistance area. You see all of these overlapping bars, 1, 2, 3, 4, 5. This on any profile would, all of these overlapping bars here, this on any profile right here, 1, 2, 3, 4, 5, 6, 7, on a time-based profile would be significant. Because there's so many overlapping bars, that means there's overlapping volume, which means it serves as resistance. And that's important. See, like here you had overlapping bars and it served as support. Well, right here you have overlapping bars and serving as resistance. So we'll see if they absorb or break out, or they're going to pull back. Let's take a look at the intraday. Basically what happened was, and here's a lesson to learn. Open this up a bit. Okay, so this is the SPY, right? All of this volume up here. All right, so you had this selling wave down, FOMC I think it was, then down. Now the question is, where the hell is it going to come back and find resistance? Well, the resistance is in the volume. There's nothing down here, which is a very good sign, because it means there's no real accumulation that can, that can propel or move higher, because look at the volume. Where's the accumulation? Nothing. But there is distribution right up here. And that's exactly where the market pulls back and goes right into this distribution block right here, where you see the heavy volume. See this heavy volume, right? So where does the market go? Right in there, Now you don't know exactly where it's going to stop. It could have stopped a little bit here, a little bit there, but it's stopped at the opposite end of this high volume area. That's where it stopped and pulled back, and guess where it pulled back to? Again, this high volume area right here is where it pulled back to, where you have all this volume and all of this time. So I mean, you can use time profile as well. I don't really see what's the big deal with volume profile or time profile. There's also a lot of here and there. So to see how this thing plays out, over here, this higher high was unconfirmed. See and that's really important to note. And on the highs after this selling was the biggest selling in 10 waves, and 391 stocks made lows, and that's it. I mean, once that happens, break trend, pullback is very weak, and it basically went down into that high volume area where it bounced from. So what are the things to note? One is on your higher time frame, draw your profile, and because those areas of high volume are just support and resistance, and make sure you are watching your breadth indicators, because they are very helpful in helping to confirm a move, right? So over here, 391 stocks, end of day short, covering 525 stocks in 42 minutes. That's enough for move. I don't really see anything else. All I see is weakness that was confirmed by the pullbacks here. Tap, tap, some effort reward, breakdown right here, and it went down. All right. Okay, that's all, folks. Thank you. Bye.